All right, welcome guys. Welcome to my stock market technical analysis channel. And we're going to get right into it. I like to do these videos while the market is open to cover kind of what happens in the morning session and point out the key levels in case there's any kind of reactions so that anybody has the opportunity to take advantage of that. Again, everything on this channel is not trading advice, just my opinion, and obviously trading is risky, so not trading advice. Here we go. Triple Qs, I want to point this out here in the chart. So here's what we got. Obviously, bullish momentum, and the momentum indicators signaled this was in play. I was pointing out this positive divergence back here when we were dropping lower, and had to point it out because obviously it was short-term bullish, and so far that has played out now. We have a move up to this next level of resistance that I see on triple Qs sitting at about, see where I have it marked out. You know, it's about right here. It could be slightly lower, maybe tag that one. Maybe it's right about, you know, if anything, it's right about where we're sitting. So I think we'll probably get a reaction here. This is the top of that trading range. Now, if we clear this, watch for a false breakout. Two potential, you know, there's really two potential scenarios setting up. One is a pop above this and kind of a stop raid basically where everybody jumps on board bullish and the shorts cover and then it rolls over. So that's one possibility. Or we run up and do a full back test of this trend line up around 296. So, you know, I don't know which way it's going to be. Right now the momentum's up, but we're at resistance. So I wouldn't expect us to just stop right here at this level. Usually if you see a key level, you're going to look for the market to step in early or it will overshoot. Right now we're at the level, so I would say an overshoot is in play. And so watch for that today. Maybe they pop it intra-hour, something like that, and then it rolls over and you get the reaction. Now, that's Q. So in the short term, you know, I think we're near the top of this move, and I think we'll probably start to roll over now. So we're going to have to watch it. Always the possibility of this full back test. The full back test right here is the most objective area to get short. This is not an area that you'd want to be adding long. If we start to break higher, you know, the area you want to be adding long is when you start to see this positive divergence here in the momentum, and then you break the trend right here. This is the objective area to add long. It's no longer an objective area to be adding to longs, and really it's more of an area you want to look at taking profit. So I covered in a couple videos back that I was long, looking for a move up to 275, got that move. Now I'm looking to start recycling back into short positions. SPY hasn't quite hit the levels that we have marked out up here, so SPY could go a little bit more. But again, if Q's, so maybe what's in play is SPY has this little pop up to its area of resistance. Q's does a little overshoot and then fails. That is very possible. Going back to SPY, the levels of resistance right now that I see, 339.15 and 342.50. And again, it's really a range. You know, to say that I'm perfect on the penny is not always that easy, but it's in the area where I think the resistance lies. And so that's what I'm watching. Let's look at gold here. Gold continues to make a move up, climb higher, but if you roll out to the bigger picture, really it just looks like we're just kind of back testing. I think we're going to roll over and hit this 1790 level. And, you know, it's a downtrend essentially. So as you can see, here was your high. We keep making lower highs. Here's a lower high here, and we keep making lower lows. So we're downtrending, even though we're having a little kickback rally. Gold continues to look like it's going to roll over to 1790, and that is how I continue to trade that. Let's look at silver. All right, so silver, here's the flag that I've got. I've had this marked out, trying to zoom in here. So looks like, you know, I've been pointing this out. Looks like a bear flag pattern. and you've got the flagpole right here, and then you've got the flag, and then the continuation of the flagpole, which the kind of the target area that I have is filling of these gaps. I think that's the most logical area. 1857 is really what it's targeting right now. And looks like we're breaking down out of the flag. It's continuing to break down on the hourly, so watch for more impulsive selling and for this to continue breaking down. So the way I'm trading silver now is I've recycled back into a short position on PAAS, Pan American Silver. We are just right here hanging around resistance. Can't seem to break it, still being rejected. So looks good. You just got to give it time to, fully reject. And for me, I see this as a trade going to the daily chart. I think we're going to get rejected here and roll over time, of course. I don't know exactly how it's going to make the move, but I think it will make the move down to 26.10. And I'll probably step in a little early and cover. I never like to just cover right at that level. I always step in early. And that is the trade. So continuing to watch that. So far, so good. We're just hanging out at resistance. And as you can see, even today, a low, kind of a little bit lower price action than yesterday. So continuing to see it get rejected. So we'll watch that. And if silver continues to sell off like it looks like it's going to, then this should roll over as well. I didn't point out the dollar. That's an important thing to always watch if you're interested in. Really, you just should watch the dollar all the time. The dollar has huge value in telling you about equities, where they're going, where gold's going. It's important to watch. And so the move down, in the dollar has been met with a move up in equities, and that's kind of how it works. You devalue the dollar and stocks move up. But you can see here this green line I've had was marked out as support. And where I get that is, really the reactions that we had back here, several reactions. And you can see, right there was the peak. We had a reaction. So I figured that's kind of where we're going before the dollar makes its next move higher. And zooming in, this hourly, we ran down, undercut it slightly, and then started to, hold support. So I think we're going to hold right in this area on the dollar and start to move higher. And where do I think we're going in the dollar? Well, to me, it's pretty obvious that we're moving up to this 95.50 area. 95.50, if you look here, you can see here on the daily going back to 2011 has held as the trend. Walking up that trend there. We recently broke that trend because the Fed's been printing money like crazy. And so we broke and had a little bit of a consolidation. But when you break a major trend, usually at least you're going to come in and back test it. So you break, you make it look like you're going to just completely fall out of bed, and then you can create a consolidation pattern, and then you break for the back test. So this is just, to me, this looks like a little pullback on the way up to this 95.50 area. And, we had clear bullish positive divergence right here. Back when the prices in the dollar were making lower lows, the indicators, momentum indicators, were making higher highs, indicating a trend reversal was imminent, and then we got that trend reversal. And so now we're making higher highs and higher lows. So 95.50, that's where it looks like that one's going. Okay, sorry, I had to take a call, so we'll continue XLV. Interesting. All right, so this is the first time I'm seeing this one today. It's recovered this flag here that we made. So here's the thing with XLV. XLV hit the measured target on this bear flag. And just to point that out, you can see there's your flagpole, the original flagpole where the selling really started. It went all the way down to here. Then you created this consolidation flag pattern, which looked to me like a bear flag. And so what I do is I mark the flagpole, I mark out the flag, and then I just carry the flagpole forward to figure out where the measured target is potentially going to be. And usually you want to mark it from the break. Once you see the breakdown, which was right here, then the flagpole starts from where that breakdown really started, which was right there. So there's your breakdown. There's your breakdown candle, which would say, okay, mark the flagpole up here. and the major target was 101, and it hit the major target pretty much perfectly, and then as we're getting a bounce reaction. So everything here makes sense. It's logical. And the technicals are, pretty much playing out nicely. Now it's starting to, make an uptrend. It's bouncing. This was, I'm looking here. Yeah, it was forecast with positive divergence, right? Right there. You can see there's your low. Then you made a new lower low, but it was a higher low in the PPO. And the RSI made a kind of an equal low, but it gave you a signal that, okay, momentum's going to start to pick up. We've hit the major target, and that was your signal. So now where does it go? Well, we could probably bounce to the top of this flag, maybe up here around 108, something like that. Or we could fail right here. And, this would be a clean failure. If it failed right here, it's a nice overshoot, kind of run some stops, and then roll over and start to make your way down towards 97. Again, that's the trend, I think, is 97. If you want to look at trend, well, look, you've got a high up here, a lower high, a lower high. So as long as you maintain that along with lower lows, then I think the trend is down towards 97. XLF, very important sector to keep an eye on, the financials. And I have one subscriber who seems to be very interested and follows the financials. And that's good. I think that makes a lot of sense. And they always point out the financials are the lifeblood of the economy. And I think that's completely accurate. We are a consumer debt-based economy, which requires borrowing and spending, essentially. Spending is 70% of GDP. So we require borrowing and spending. Well, where do they borrow the money from? They borrow it from the banks, to get that money in credit. We're a credit-based society, so they are the lifeblood of the economy. However, the financials are not they don't have the weighting in the S&P 500. The sector's not that heavily weighted. So tech and what tech does is what will move the markets. Now the financials fundamentally might move tech, but there's nothing on a chart that I can watch. So I watch I watch tech, which tells me where the markets are going to go. Financials, though, can tell you potentially where tech's going to go in the future. So it's important to watch. We're getting a kickback rally here, still holding at resistance. Zooming in here, I got some resistance right here at 24.17. Still holding there. That we popped it briefly, but it's just right there. So we could fill this gap up to 24.66. Maybe that's the end of the move. I wouldn't expect us to go much beyond that, but that's completely possible. And then we roll over, making our way down to, right now I've got it marked at 22. So I'll have to kind of tighten that up, but I still think we're heading lower and downtrending. Apple, I think your resistance, I don't think we're quite there yet. I think there's some resistance right here, 118.45. The reason where I get that, you can see we held that right in here, and then again had a reaction there, and then we overshot it right here, but that hour was sold into and it closed below that resistance. Had another hour where we closed right at it, and then again another hour right there. So that's kind of near-term resistance that I see. And so we're either going to, pop it, kind of overshoot it, or not quite get there, undercut it. And we should get a reaction there. Maybe that reaction's all the way back for a full back test of this trend line down here. That hasn't happened yet, so I could see that easily playing out where we sell off back down to 110 or so. Maybe the buyers step in there. That would make sense that they would step in there, and then we start to move higher. A full back test is not out of the picture in Apple over time, and that would probably be congruent with a full back test of the trend line in triple Qs as well. I don't think it's going to happen, but it's possible. I think we're heading lower personally. But again, could hit this resistance before we do. Microsoft here, Looks like we're setting up for a topping pattern. Now, it doesn't have to play out, but we potentially have a, let me see if I can find my tool, a reverse head and shoulders where you've got a left shoulder, you've got a head right up here, and then you could be making, you know, some sort of a right shoulder pattern. So watch for that. It's obviously we haven't made the shoulder yet, but we could move up a little bit higher, hit resistance, chop around, and then start to roll over. And if we do that, then watch for the break of the neckline. Right now, the neckline that I have is about right here, 201.20. I think that's the clean neckline. But if you wanted to, you could move it down, do kind of a benefit of the doubt neckline, which would be down here. You know, you could even cover all the way down here, but maybe down there at about 199. So that's what I see there in Microsoft. Amazon's at resistance right now. You can see we're getting a reaction right here as expected. So we overshot that resistance level just briefly, and now we're getting a reaction. So I'd look for a pullback on Amazon, at least down to this 30, you know, well, we could gap fill. That might be an area 3101. They might step in there at 3101. Or this could be it. You know, this could be the end of this rally, and we're going to continue the downtrend. And I think that's what's happening. But again, you know, the bigger picture tells me we are rolling over in a, you know, going to start a bear market or are already in a bear market. When I say the bigger picture, I'm not talking about the last 6 months. All right. When I'm talking about the bigger picture, I'm talking about basically years in time. And if you go to the weekly here on the S&P 500, I'm talking about a 2009 bull market trend line right here on the weekly. Here's the 2009 lows. Here's some reactions, reaction week there, lots of reactions right in there. Broke trend in 2018, back test, Fed-induced back test, broke again. You know, haven't quite done a full back test this time, but got close. Again, Fed-induced back test. It's multiple expansion, all right? That's why these stocks move up. The Fed drops interest rates, stocks, you know, they expand their, they lower their discount rate essentially, and you get multiple expansions. So earnings are not moving up, but the discount rate is becoming less. So it's multiple expansion. So Fed-induced rally again. But all this price action for the last couple of years has been below trend. So the trend is broken. We're in this topping pattern. To me, that's why I think longer term, we're going to roll over. Once we get out of this topping pattern, you know, eventually kind of roll over. And so I don't look at just this rally here and say we're in a bull market, this is a bull trend. I'm looking at the bigger picture. Small caps, we're just in a sideways trading range right now today, just continuing. There's really nothing to do here on small caps. Here's the hourly right in the middle of the trading range. So I pointed this range out. We were up near the top. I said that's probably the short, and we're going to go to the bottom. And sure enough, went down to the bottom, undercut it a little bit, but recovered. And now we're just in the middle. So small caps are stuck in a sideways trading range until you get a resolution one side or the other. Then you don't know what the next major trend is. And until then, you know, you could obviously go long at the bottom of the range, short at the top of the range. Just play that until you're proven wrong. You'll be wrong eventually, but maybe there's some bounces you can catch in between. All right, DraftKings, this is a trade idea I pointed out the other day. Looking good still. It's just kind of walking up this back test pattern. Now, and what I've seen these do is they'll just kind of hang out in the area, and then they'll just keep spiking and doing this little spiky back test. But there's no staying power, so they'll just spike and then roll over, spike and roll over. And that's kind of what we're seeing. We basically spiked here. Kind of started to go sideways, spiked again. This spike the other day, which was a doji candle, but there was no follow through the next day. But we did get a doji, and it's just, you know, here's another spike, and they roll over. So it's just topping out is what it looks like to me. So I'm going to continue to play that. Any new spike above this previous high is a divergent high right now. You can see here, if I tighten this up, we have a big divergence there, but we also have a small divergence. I think this is a negative divergence. Let's look. Yeah, it is. So the spike high right here was a lower high in the momentum. So any little spike that we get right now is going to be a divergent high, and that's, divergent highs are areas that have a high propensity of failing. So to me, this looks like we're going to roll over, and that's how I'm trading it personally. I am short this position. Tesla just walking up the trend line. So this trend line does look like it's a relatively valid trend line that I've had marked out. I haven't been in love with the trend line, but you can see we're getting some reactions, continued reactions around the trend line. So I think I'm close on my trend line. And we're just holding this level, but it's not impulsive. We're just kind of grinding along this level. Anytime you grind along support and you don't impulsively bounce off of it, to me, it tells me it's going to fail and break. We do have negative divergence in play on Tesla. And you can see here on this trend line, every reaction that it's tagged in the past has been an impulsive liftoff from that trend line. So you can see we made the trend line back here in March, tagged it in April, impulsive liftoff. That was a gain from the tag of that trend line really to the high, of about 88%. Then you tag the trend line again right here, impulsive liftoff. Then you tag the trend line again right here, impulsive liftoff. Then you tag the trend line here, and it still was relatively impulsive. It wasn't as good. Its momentum starting to fade. And then you undercut the trend line, kind of recover it, but there's no impulsive liftoff. We're just grinding around. So I think we're going to get a gap down in this thing. It's going to gap down and then sell off. And that's what I'm looking at. So targeting for these gaps right here that were set back in June, and those levels, key levels of 254.50, 245.50, and 224.50. Those are just rough numbers, but those levels. NVIDIA keeps inching up closer to a full back test of the broken support line. So that's a key area to short. So look for a day maybe where NVIDIA is up like 10%. Usually when they make the full back test, they do it all in one day. So maybe you'll see this huge impulsive move up 10% or so, or whatever this move is. This from where we're at now, that is I guess it's only about 5%. So look for a 5% gain, and everything will feel and seem bullish at that moment. And that is usually often the best time to start to short the stock. So I'm looking for that one. Oh, and on NVIDIA, just starting to put in some negative divergence right here. So you can see it right there on the RSI. This little peak that we just made in the RSI is a lower peak, and we're making it on a higher price. So price is moving higher, diverging from momentum. Momentum is indicating that we are going to reverse or roll over. So if we continue to work our way up and do that back test, that's the objective area, especially if we continue to see negative divergence start to play out. KHC continues to be rejected at this resistance, 29. It's about $30, 29.96. So to me, I think that's the end of this bounce. I think we start to roll over, work our way down to 25 area, and that's where it will start to get interesting. I'll start to look at a long position there. Philip Morris looks good. I pointed this one out. This one was like really a picture perfect long trade, really. Let's move this divergence line down here on the PPO. We had bullish divergence or positive divergence basically as price was moving lower, indicating that a trend change was imminent. We also had a bullish falling wedge. We broke the wedge, came in for a back test, and now we're starting to move higher. So you can see we're up 8.85%. So I added to my position yesterday, and so far looks good. Bullish divergence is still intact. So looking for this to make a move to the upside. On the weekly here, you can see this is your downtrend line on the weekly. Lots of reactions. We had a false breakout right here, bull trap, and that was followed by impulsive selling. We then got another breakout here. I think this one sticks. And so we had the back test of the trend line. I think we start to make our way up to 90, about $90. So for now, $90, probably get a reaction there. And then possibly up to this 101 area. over time, of course. Negative divergence continues on Zoom. And price continues to kind of work its way higher, so tells me that we're going to have a trend reversal sometime soon, although there's no sell signal. So maybe a break of this upper trend line right up here around 415.50 could be you could use that as a trade sell signal and look for it to break down below all this bearish rising wedge action. And that's really what I see on that one. Trying to find anything else that looks interesting. Pulte, I've been covering this one. Pulte's just back testing. So this is a daily chart, but you can see we're just back testing. We have, we had negative divergence back here. It's still intact, and we've broken the trend line. If I go to that, not the 2 hour, the 1 hour, you can see full back test right here. So another back test, another objective area. I might take a small position on this one right here. Looks good to me. Okay. Took my position there, short on PHM. And so what do I expect of this one? Well, probably, it could continue to sit there and do this back test action, but I do expect eventually it will roll over. So, what I do is I start adding when we do back tests. I build positions, and, you don't have to take it all at once. And you can just add as you start to back test. If we break above the high up here and start to run, or really a recovery of the trend line would be pretty bullish. So just watch for that. Anytime you recover the trend line, then it's a false breakdown, a bear trap, and usually you want to bail. Okay, mRNA, I'll wrap up here. I know people are interested in that. Uptrend line right here on the daily. We broke the trend. We made a down flag, and we are looks like we're kind of working our way up in a counter trend bounce. I think we continue down. So the trend was up here, a little break right here, counter trend bounce, and I think you roll over a little bit. Now, the thing with these, there is no negative divergence. I'm not seeing any kind of, I see no divergence in the indicator. You could see here that we had negative divergence, or sorry, not negative. We had negative momentum here, but price was moving down, confirming that momentum. So there was no tell there. Then we started to make positive momentum here, and price was moving higher, confirming that momentum. So there's been no forecasting tells from the momentum indicators that I can see. The thing about these that I'm not interested in any of these really is the fact that these are just speculative plays based on a vaccine. And if they create a vaccine, there's no telling whether they do, but if they do, there's going to be maybe one winner, and all the rest of the companies that are trying are going to be the losers potentially. So what winner is it going to be? Because these are way pumped up based on the hype that they're going to have a vaccine, and only one of them is probably going to create it. And so I don't know which one that's going to be. So for me, it's just kind of a gamble, and I'm just not really interested in it. I'm going to wrap it up here, guys. Let me know what you guys think. I hope you're finding some value in this, and leave me a thumbs up if you do, and I'll catch you guys on the next one.